Hey guys, welcome to another video brought to you by Total Control Traders. In today's topic, we're going to talk about entries and exits. Why are entries and exits so important in our trading? Every day-to-day trading. Well, if you get the entries and exits right, not only can it improve your profits, it can also reduce your losses. It is crucial to always know and understand where are the best entries, where are the best exits, or at the very least, best to your capability of determining where the best entries and exits are. And before we get into it, keep in mind, when it comes to participating in the market, traders care more about what's going to happen to the right side of the chart versus the left. The right side, we're looking to predict, anticipate what's going to happen, and that is where the profits are going to be coming in from. Now in today's video, we're going to be focusing on four main topics. One, what you need to know. Second, different ways of approaching entries and exits, how to determine them. Third, how I personally determine entries and exits. And fourth, what matters the most. And without further ado, let's get right into it. First one is what you need to know, step by step. First thing you need to know is trend. What trend is the market and what trend is the ticker that you're looking to trade currently in, whether it's bullish or bearish. Now, the easy way to determine that is going to be using a channel. Is the channel trending upwards or is the channel trending downwards? That is crucial in determining what your game plan is, what your entries, exits are, and whether if you're going to be trading bullish or bearish. And understanding the trend that your current market or your current ticker is in is a must. Second is understanding patterns. Now, I wouldn't call this one a must, but it is definitely most ideal to recognize what patterns you're in. That will help you identify more precise entries and exits, whether if it's going to be a W pattern. It'll help you identify entries from the bottom or exits from the top. Third is game plan. What is your game plan going into the trade? Where are your entries? Where are your exits? What trend are you trading in? What pattern you're looking at playing? Fourth, of course, being the entry, which is the detail within your game plan. Where are you looking to enter? Where have you determined as the most ideal entry? And that ideally you want it to be based on purely technical analysis or fundamental analysis, whichever one you prefer. Of course, our channel is focused on technical analysis versus wishful thinking. Always make sure that your entries are based on factual information versus wishful thinking. And then from there, maybe dividing your entries up into helping avoiding FOMO or trading on emotions. And fifth, last but definitely not least, is exit. Without knowing your exits, your trade can go from green to red very easily. And knowing where to take profits or stop losses, that is one of the most crucial when it comes to trading. Where are your most ideal exits? Same thing, based on technical analysis or fundamental analysis versus wishful thinking. Never trade based on wishful thinking. Never trade based on hope. And again, the same thing as your entries, maybe divide them up into multiple exits as well in order to help avoid regret. And now onto methods. How do you determine entries and exits? These are going to be listed in the order that I personally learned them in. Does not mean which one is most important. That will be rated on the next topic. And of course, these are not the only ones that I have came across during my trading career. There are a ton of others in between, but we're only going to be discussing the ones I am currently using or still using today. First one is support and resistance. Now, when we look at a chart, being able to determine support and resistance is going to be one of the most basic skill sets that you're going to need as a technical analysis. Now, looking at the chart, where would you say the supports are? This is going to be one of the easier ones. You just look for the higher lows or the lower lows, and those are your supports. So these are the supports. And then now the same idea, looking at the chart, you gotta be able to determine where your resistances are. And this is one of the first technical analysis skills that I had picked up during my trading career. So what the support and resistance is going to do for you is it is going to show you where previous rejections of the prices are and previous support, previous bounces are from. being able to do this is crucial. Now, when we look at the previous resistances, sometimes you will also see they come back and serve as support. However, from experience, purely using support and resistance, I find there has been a lot of occasions where you get stop hunted, where if you're playing purely based on support resistance, you would put your stop right here, and as you can see, you would put your stop right here, and as you can see, you will get stopped out right here before the chart starts seeing a strong bounce. Same idea as if you were to use previous resistance as a support as your stop. You can see that it popped up over and then immediate stop hunt right after that before another leg up. So that's the downside of using only support resistance. And the second one I learned personally was the oscillators, whether if you're using MACD, momentum, or RSI. My personal preference is RSI. And when you first pull up the indicator, it's going to look a bit messy in the sense that it's got multiple lines, but you actually don't need any of them. All you need is basically just the RSI itself as well as the bands. One tricky part about the bands is in order to set the higher band and the lower band, you will need to turn them on and change the numbers. Personally, I like to set mine at 75 and 25 to show overbought, oversold territories. The default is 70 and 30. That I find it triggers a little bit too often just for my personal liking. What the oscillator is going to do for you is it is going to show whether the chart is in overbought or oversold territory, whether there's going to be bull divergence, bear divergences on the chart. That's going to ideally prove to be a profitable trade using those divergences. And those going to be a little bit more advanced trading skills, but it is definitely something that you want to understand as soon as possible. Divergences are one of my personal favorite indicators to be trading on, and that's using the oscillators that you have. And third is going to be volume. Volume is going to be one of the most important indicators that you can use, and it is one of the most reliable indicators in my personal opinion. The way you would use volume is whether it's going to be a volume climax, whereas it shows right here, or a volume pop during the day. For example, if we were to look at the pandemic low, you can see that the volume was increasing bear volume, showing that there's going to be further downside. Now there was a volume climax over here, thus was followed by a few bounces the next day. Volume, there's multiple ways that you can use it, whether if you're going to be using it for reversal play or continuation play, but it is definitely one that you want to familiarize yourself with. It's not going to be one of those that's going to help you nail the bottom or nail the top as frequent, but more often than not, once it shows confirmation, you should see follow through, versus a lot of times if you were to only use support resistance, you will get faked out. Volume tends to not nearly as much. And the fourth one is EMA, exponential moving average. So there is multiple ways that you can use this, whether it's 8 EMA, 10 EMA, 12 EMA. The most common ones are 8, 12, 24, 50, 200, and also 100, of course. For me, my personal favorite is the 8 EMA. The way I like to use this is whether if it's on the bounce play or a continuation play, but it is not going to be one of those that's going to help you nail the top or the bottom either. And you can also use it as a indication of the strength of a chart, continuation, or whether it's going to be a reversal once it loses that EMA. Now on the topic of EMA, you also got to understand that some of the charts do not respect your typical EMAs like the 8 EMA that I use. Some charts, they don't respect it. You'll see a lot of fake outs such as this one. You just got to understand how the chart behaves in regards to your EMA before going into a trade. Every chart behaves a little bit different, and the one that is most memorable for me myself is Boeing. Boeing tends to have a lot of fake outs, whether it's EMA or trend lines. Regardless, just make sure you understand how a chart reacts to your indicators or your drawings before going in heavy on the trade, any trade. And number 5 is one of my favorite for determining the reversal or bounce plays, and that is the Fibonacci ratio. This is amazing for determining that right side of the chart that we talked about, predicting, anticipating what's going to happen to a chart versus looking at what's already happened on the left side of the chart. You want to know what's going to happen to the right side of the chart. So with this one, it's a little bit more harder to use unless you are very familiar with higher lows, higher highs, or lower lows, lower highs. So this is based on the trend that we talked about. You need to be able to identify a trend very easily. And in doing so, you'll be able to draw a fib very easily as well. So for example, this higher low to the higher high, we can see that the balance came to at the balance commenced at the GP. And very similar idea, if you were to look at a downtrend, you will use the fib extension from the high to the higher low to the lower high, higher low or lower low to the lower high. And if you were to use one-to-one extension, you can see where the chart is bouncing from, just right around there. So with the fibs, the prerequisite I would say is understanding the chart, understanding the trend. And in understanding the trend, you will be able to determine the higher highs, the higher lows very easily. So just to give you guys an example of once you get experienced with it, how easy it can be. This will be the higher high, higher low, higher high, higher low, and this is a clear trend up until over here. This is a lower low comparing to this higher low over here. Or if you're looking at this higher low, then technically this one is a higher low, but then it became a lower high over here and the trend reversal into a lower low. So these are key pivot points. There are indicators out there that can also help you identify these pivot points. And to be specific, one of the ones I use is called pivot point high low. So by using that, it would help you with your Fibonacci drawings. For those of you that are interested, you should look up how Fibonacci works. It is one of the most mind-blowing when I first learned about it. When I first came across it, read through it, and I was just like, what the fuck? Are you serious? Yeah, I don't believe this, but let's try it out anyways. And since that date, I am still using fibs to this date. So that goes to show how much I believe the fibs work, and it has continued to work for me. So knowing how to draw them is crucial in determining that right side of the chart. It is a skill set that cannot be missed. In my opinion, it is absolutely crucial to learn the fibs, whether it's extension or the regular ratios. And just to show you guys what ratios are most important for me when I look at fibs are the 0, 0.236, 0.382, 0.5, 0.618, 0.65. Now in between these two, the 0.618 and the 0.65, that is called the golden ratio, the golden pocket. Next one is 0.786, and then 1. And then the numbers repeat after that is going to be 1.272, 1.618, 2.272. There's also these ones I don't use as much, 0.414s, but take a screenshot. This might come in handy once you learn how to do fibs. And then that next one I learned was linear regression. And linear regression is kind of an interesting indicator by itself. It moves based on what the current prices are, what the previous certain periods of prices are, and that it will form a channel for you. That channel is going to always have majority of the tickers inside the channel. Every now and then when you do see candles outside of the channel, that is a time to be a little bit more concerned, as it may be an indication of a trend reversal coming up. So with this lower candle being outside that lower trend line of the channel from linear regression, once we get to over here, I can see this turning into a channel that's going something like that, instead showing a decrease in momentum as the channel is going from more of an angle upwards to more of an angle downwards. And then as the chart develops, what you can see from there is the channel becoming like this going forward. So understanding how the linear regression work took some time, but it is definitely one of the most worthy learning, especially if you're looking at daily charts or longer time frame charts. And the next one is trend lines. I would call this the upgraded version of support resistance. Once you learn how to draw it on trend lines, it's similar to identifying a trend, similar to drawing a channel on any chart. However, you're just being a lot more precise when it comes to trend lines. So for example, you would need to be able to identify that lower lows, the lower highs, and then you draw a trend line from there. So looking at this was the clear loss of the trend line. It back tested as well, and then that's why you saw further downside. Being able to draw a trend line will not only help you identify the current trend, but it'll also help you identify levels that do not show on support resistances. So for example, this bounce over here, there were no support resistances in between. If you're purely looking at support resistances, this would have been one of the hardest stop hunt that you would experience, because you are using this previous resistance as a support. and it came back down and then it bounced from here. Now looking at support resistance, there is no significant support resistances in this area, so that would be confusing as hell as to why the chart is bouncing from here. That's why trend line is one of the most important, one of my personal favorites. And also, trend lines also help you identify the current pattern as well as you get used to it. So for example, if we're looking at the current price development on this particular chart, you could begin to call this a rising wedge potential, meaning that you're looking at lower trend line of over here and upper trend line of over here. So for beginners, it might be easier if you to draw a trend line from here to this top, and then a trend line from this low to the most recent low. That will show you the trend lines of the upper trend line and the lower trend line of the rising wedge. With trend lines, it is very crucial to always identify it prior to placing a trade. It's one of those tools that will help you identify the bottoms or the top of a chart versus a lot of these other ones, support resistance, EMAs. They are not there to help you identify the top most of the time. And last but not least are key zones. So with key zones, what we're looking at is significant areas of support and resistance. So basically it's an upgraded version again of that support resistance, but instead of an angled line, what we're looking at is a zone. So for example, over here, you can see previous resistance and it also back tested as a support once. So you would draw this as a lower part of the zone, and then somewhere over here can be the upper part of the zone, because you can also see the multiple resistances from this part and multiple supports from this part as well. So this would mark a very significant zone. If we were to get over back down into this area, you could anticipate a bounce from the top of the zone. If not, it would be the bottom of the zone. That would be the must hold on this chart versus using a simple support resistance where you would draw your resistance over here and then you see the loss of it and you would be stop hunted again. So it is very crucial to try different methods out there. Whether if that's support resistance, if that's something that's worked for you, great. Whether if that's trend lines. And the next topic is we're going to be discussing what I use, ranked from the most frequently used to the least. Number 1 being trend lines, number 2 is key zone, number 3 RSI, followed by fibs, and then linear regression. Those are the top 5 that I use on a daily basis in determining both entries and exits. But there are a couple others that I feel like I must discuss, and they are frequently used as well, just maybe not on a daily basis and not for determining entries and exits. And those are EMAs and volume as discussed. EMA is looking at strength or bounce plays. Volume is looking at confirmation most of the time versus, or maybe beginning of it if you see a volume pop on the shorter time frame. But not something that I use to determine entries and exits as often. Volume can actually be very good at determining entries or exits, but you're going to need to look at them on a shorter time frame for that volume pop. And now onto our last topic, the most important. It is never going to be about what I'm using that's going to be right. What you're using is going to be right for everyone. The most important is knowing what's out there, trying them through trial and error, using different indicators, using different drawing tools, finding the combination that works for you, backtesting it. So if you were to coming across a new indicator, a new drawing, what you could always do is backtesting it, drawing on the previous price actions, see how they react, and then finding something that works best for you. I hope this video helped answering some of your questions on how I personally find entries and exits, how some other people find entries and exits, and why people get stop hunted all the time. So hopefully that will stop happening to you and help you find the most ideal entries and exits going forward. Thank you for watching. Make sure to give a thumbs up. Really appreciate you joining us here today. I will see you in our next video. Make sure to check out our online Slack trading chat group with proven results of 86% win rate out of 318 successful trade callouts. Free to join, limited spots on each enrollment period. Link down in the description below. And hey, if you know anyone that may benefit from the content we provide, please consider sharing our channel. Thank you for watching. I will see you in the next video.